Hi everyone, my name is Anne-Marie Band. Today is Monday, March 25th, and this is the Moneyball Morning Report for the Benzinga Pro platform. I'm starting with the NQ today because the semis are under pressure, and of course they're within tech, and this is our tech index. And what we do notice is that they are fading. They did not close very badly on Friday, but this morning they are giving it all up, and we are below Friday's low. So what's happening? I think reversion to the mean is fairly likely. China has said, hey, we don't want you guys using our chips for any government or state noted things, and something like 7 to 20% of their income comes from this space. And so this is in a dip buying formation, but what we really see here is a sell on the bounce. And so let's just hop to the 30-minute. Go back, rewind. I don't even know what people say to that. You can see negative pressure, so have a peek. So here we are. The rounding formation. Notice, see the extreme level? It still tells us if trend is down and you get an extreme level on a stochastic, it's still only bouncing into the trend and then reversing. Same sort of thing here. How do we know that the price action is getting a floor? First thing, it's going to stop heading lower. Now notice, this is Friday's formation. It stops heading lower for the day, but collapses at that third standard deviation ribbon, and this is from the NQ. This is the NQ on TrendSpider, and so TrendSpider is really great for its visuals. It's absolutely fantastic. Bar none, absolutely fantastic for web-based. Okay, so what's it doing here? Extreme level, all the way down third standard deviation band. People are going to try and bounce. They are. They're going to say, hey, wait a second, I'm almost 3 standard deviations from the mean, which is the VWAP. I'm going to buy that. So you really want to pay attention to what's going on before you say, hey, I'm going long and I'm staying long, right? So let's look at the Qs. All right, Qs trying to bounce off the floor here. Take a look. Band here. What's it do? Bounces into those moving averages and then collapses. Look at this wick. This wick went all the way to 446, came right back down. 443 is going to be a big number for these guys, but the bounces are sell zones here because we are continuing to drift lower in the wave action, and trend is dribbling downward. Now, we've had several days of downside pressure, and so, for us in the charts, we really want to look at this and go, it really doesn't take more than a few days of downside pressure and then it bounces. So it's still buy the dip. But what you don't want to do is just jump in full size and go, okay, I'm buying the dip here because, all right? You've got to be very, very quick or you're going to be very, very sorry, all right? Bounces, this is a nice clean area, this 444 zone. Traders want them to hold from a buying perspective. If you can't get this to hold here, 440 is very likely the next line in the sand. Let's take a look at the ES. Take a look at the daily. Here are our lines in focus, right? The key support line is going to be deeper. It's down here. We've got 3 days of motion here. And we've got some pretty good price action at 52.68. They started trying to buy almost right off of that level. It might have been 52.71, something like that. But they are trying to buy the dip here. Notice the slope of that VWAP over the last 3 days. It's been down. Key lines, 52.35 is that key support zone. Really, 52.38 probably where they're going to start buying. Range resistance, 53.15, and then the measured moves all the way up. My thought is this is a sell the bounce and watch for lows to stop heading lower. That's what the day is going to look like today in my mind. Notice trend. Just before those vol bands came up, you can see trend is sharply negative. The momentum indicators, which really are very tight, they're very fast, right? Very, very fast momentum indicators. They are really telling us, okay, here I am at the extreme zone. What is it going to do? It's going to try and bounce into resistance. If it holds resistance and pulls back and stops heading lower, we've got ourselves a trend reversal. So that's what you want to watch for, all right? Don't nurse these and overly stare these down. wait for the key areas, take a look and go, oh, that's not heading lower. Where's it going to? First area it's going to is resistance. Well, that's only 2 points away. I don't know that I want to sell that right there, or I don't know that I want to buy that right there. Why not wait for the VWAP combined with heavy congestion to initiate a trade, and that way you know you can hang on to it for a while. Let's take a peek at SPY, same sort of thing, right? You want to look at the slope of the VWAP bands relative to the slope of these moving averages. Now, slope of the moving averages are upward. They're saying, listen, this is a buying formation. Slope of momentum and the VWAP band are saying, yeah, it might be bullish, but it's buy the dip time. So I need to wait for an extremely solid buy the dip event, which is all the way down here at 517. Or if I'm trading it in the way of resistance, I wait for the bounce to sell intraday, so I'm in the rhythm and flow of both momentum and trend. All right? That's what we need to look for on the daily formations, right? 513, always going to be a lower level key support zone. That's inside of the heavy congestion and also a VWAP, a Fibonacci level. It's neutral to bullish. We're out of the FOMC week, but it is still a buy the dip formation in general, okay? Buy the dip formation. Now, these guys are similar, but lower highs and lower lows. When we go to the volatility bands, we see the same thing. Downward slope, downward momentum. And again, your key lines in focus, upward measured moves all the way to 524. This morning's resistance, to me, feels like that 522 area. Okay? 522 and then 523 and some change. Let's take a look at YM. A lot of us now trading the YM. How is this staring down? They're trying to buy the dip, right? Let's go to the daily first, right? This one has been quite bullish, but now it's slipping into that yellow territory that says, hey, we're trying to come back into solid support areas. So what are they, right? Here is, from a daily perspective, this line right here gives us a breakout and a test. That's 39, maybe 560. I've got range support at 39,700 or so, because that is a Fibonacci space, and it came almost right into it, right? Almost right into that 39,730 area. I'll turn that into the Fibonacci number for us to watch. It is still by the dip. They are still quite strong. It is still a breakout of a rising wedge of some kind. And the traders, take a notice, the traders on these 4-hour and 30-minute formations, both of them show this type of extreme motion, right? So this is down, but it's now coming into support, and we know, I don't know where that's 39,700 level gain disappeared to, but I am going, I'm going to clone this and put it right there, right? So we know that that's what we're looking at. Traders are going to try and come in, but trend is down intraday with the VWAP band, so they're very likely to bounce. For a buy zone perspective, love it here. This is a really nice place. What you want to do is make sure that your floor is very well aligned. So you go, hey, listen, 805, maybe I wait for it to come back to 760, so I only have a 30-cent, a 30-tick move, a 30-point move in terms of risk, and then maybe I can buy it up to 846, right? That's almost, what is that, 70 ticks or something. Yeah, looks good. Let's take a look at oil very quickly. Oil is very sideways. Let's take a look at the daily, right? Notice I said, hey, listen, this is resistance. It's going to pull back, try and hold new areas of old support. I said that number is about 80.13 or something like that. And where did it come down to? 80-30, right? 30s and 70s, great places to initiate trades in oil. What are we looking at this morning? Old resistance, new support. Price action should move to the north. I think range resistance is the same sort of thing, right? We're still looking at, hey, if I can buy close to the 80s, it's going to look all right. I'm trying to hold the floor. I better not try and hold it more than 81.50. It might give me a little bit of trouble, or I take some profit. Notice, momentum is still sloping down from a daily perspective. 30-minute, though, it's a little bit sideways. Yes, momentum is down. Notice, when it gets into these zones, it says start watching for the bounces to hold. Now, if this is sideways and I've got a bounce, it moves into resistance, it starts fading, and I went long here, I've got to take some profit if I'm trading intraday. I look for the next time it moves. Yes, it holds the floor. I'm going to shoot for it. When it gets to that third standard deviation band, when that VWAP is flat, it is telling you time to go, reset the trade, and go for that long somewhere around 80-70. All right? Now, let's lastly check out gold. Whoops, wrong contract. All right, gold lifting a little, right? Momentum is up, trend is flat. What does that tell you? Cross current. That means you'll be able to take it long, but you better get out when it gets near those third standard deviations. Trend is the most important thing. Momentum is second. So trend, let trend be master and commander. Let momentum be your number one. Sorry, Star Trek joke. And then, you go from there. Right now, I'm such a nerd, right? To have a Star Trek joke there? Terrible. Okay, so what we're looking at is that 2160. This one is still in breakaway, right? It is still bullish, still in breakaway formations. Dips, going to be buy zones. Momentum telling us, yeah, momentum's drifting, but I am still finding buyers here. The moment that the buyers stop hanging out at 2150, you got to hit the road, okay? Take care, folks, and I'll see you on the platforms today.